As Donald Trump's chances of reclaiming the White House in the upcoming presidential election increase, so does the value of the US dollar. If the Republican returns to the office in November and follows through on the promises to raise tariffs and cut taxes, the US Fed Reserve will have to adjust its interest rate cutting strategy to counter the resuming inflationary pressures. Of course, economic indicators will also play a crucial role. Some of the most important data will be released at the end of this week. But first, let's take a closer look at how Tuesday and Wednesday's reports, scheduled for October 29th and 30th, could affect the forex market. You are watching Traders Calendar. The Consumer Confidence Index serves as a kind of a barometer capturing the mood of buyers across the country. After all, consumer demand drives economic growth. This time, the German index is projected to show modest improvement, rising from a minus 21.2 to minus 20.5 points given the euro potential boost. The euro's bullish momentum may be reinforced by labor market data from the United States. The number of job openings is estimated to have fallen by 140,000 in September. With the highly anticipated non-farm payrolls report due on a Friday, all eyes will be on the US jobs data this week. Therefore, a drop in the job openings would likely weaken the greenback. However, this downward movement could quickly reverse with the release of the US consumer confidence data. Forecasts suggest an increase from a 98.7 to 99.2 points, an optimistic signal for the dollar, which could trigger renewed strength. Wednesday, October 30, kicks off with the key reports from the Asia-Pacific region. In Australia, the focus will be on inflation data. An expected 1% drop could put pressure on the antibody currencies, namely the Australian and the New Zealand dollars. Japan's Consumer Confidence Index is expected to increase to 37 points. However, this rise does not guarantee a stronger yen. Following last weekend's elections, the ruling coalition lost its parliamentary majority, further complicating the Bank of Japan's plans to raise interest rates and impacting the yen's position against other currencies. It seems the euro will find itself at the mercy of the US dollar on Wednesday. At least according to the forecast for that day's reports, Germany's GDP growth is expected to decline from 0 to minus 0.3%, which in turn could weigh heavily on the euro. However, the Eurozone economy is expected to expand by 0.8% year over year, and this could create opposing forces for the euro, leading to price swings. Market volatility may increase later in the day, and the US private sector is anticipated to add 110,000 jobs in October, down from 143,000 in the previous months, which could weigh on the greenback. 15 minutes later, the US will release GDP growth data. While the country's economic growth is expected to remain steady at around 3%, the price index, the so-called GDP deflator, may rise from 2.5% to 2.7%, given the dollar's reason to strengthen. Please note that the UK and Europe switched to winter time on October 27, while the United States will make the change 1 week later. Data release times are set in a GMT+3. The next video review of Traders Calendar will be released on Wednesday, October 30. We wish you profitable trades and see you later.